As of October 2024, the S&P 500 and NASDAQ are showing strength driven by resilient corporate earnings, robust demand for tech, and easing inflation pressures. The S&P 500 is buoyed by sectors like healthcare and consumer staples, expected to perform well amid potential Federal Reserve rate cuts, while large cap stocks, especially in tech, continue to dominate. Nvidia is a standout, benefiting from surging AI demand, which pushed its stock near all-time highs. Volatility is a concern due to geopolitical risks and Fed policies, but this is viewed as a potential opportunity for short-term gains. G'day folks, welcome back to Pete's Investing. Before we get started, make sure you hit that like and subscribe button and share the video. So first we look at the trends on the monthly, the weekly and the daily. You can see here on the monthly, we're broken up above the moving averages of the CCI 150, and that's also making new highs on our price chart as well. On the weekly, that's also making new highs as per the price chart, but also notice we've got a bearish divergence playing out at the moment with lower highs on the CCI 150, so be careful about getting too heavily invested in any stocks at the moment on the S&P. And on the daily, likewise, we've got another bearish divergence, lower highs versus higher highs on the price. Now, the way to look at that in more detail, if we go to the micro view, using the daily as a reference, you can see there lower highs on the CCI versus higher highs on the price. It's actually punched through that previous resistance we had at 57.73, and there's no sign yet of another resistance at the top of that, but we'll keep an eye on that. But do notice here we've got a bearish divergence on the 1 hour chart versus higher highs on the price. So we may see a pullback, and the very minimum, if we draw a Fibonacci, assuming it starts falling from there, from that high at the moment, it could actually go a bit higher, but assuming it starts pulling back from there, then we're going to see and expect a pullback to the very least to the 23.38% level, which coincides with this current resistance we had at 57.73, and it may well come back and rest on that in the short term. So just be careful of, again, going long. We only trade in the direction of the higher time of the daily in this case. If you're trading on the intraday time frame, we only take long trades based on the daily, and therefore you would have taken short trades during that little period there on the daily if you were trading on the intraday. For the NASDAQ on the weekly, the monthly, first off, we've got a bullish movement on the CCI breaking above the moving average band, likewise with new highs. Now I've drawn on the monthly, I've drawn a bearish divergence here, lower highs on the CCI at the moment versus high highs on the price, and I've drawn a target area, and that's at 23.38% Fibonacci range, in that range there. So that's a long-term divergence outlook on the weekly. And we've also got another. Now we had a bearish divergence here. We still have a bearish divergence, actually. You can see there from that point there to that point on the CCI, and that coincides with that area there. But if you look at it in more detail, that's a bearish movement there, but it's not a bearish divergence yet, because you can see there those highs are lower than that previous high, and so is the CCI. So that's tracking currently with the price chart, so there's no divergence there. But longer term, we did have a divergence, and just be careful of that, and that could play along with what it's projected on the monthly time frame. On the daily, let me just zoom in on this one as well. You can see there it's actually currently resting at this minor resistance at 23.20, and we might see a bit of a pullback from there possibly, but the next resistance will be up there at 27.60. So at the moment, there's no divergence really. That's a double top almost on the CCI versus a double top on the price. So currently only taking long trades in line with the daily. If you're trading on the hourly or the intraday, we take only long trades based on the daily. But again, notice on the hourly, we've got a bearish divergence, lower highs versus higher highs on the price. So that could pull back. And if we were to draw a retrace, we take it to that high there. You can see there it's already hit that retrace level between that 23.38% level. It's already hit it. So it may have already done its dash, but the CCI is still dropping, so we might actually see it pull back again, so just be careful about that. I'd like to see this break higher and start trending in a more northerly direction to be more bullish. Just be careful about going long. Of course, the price could still go higher, and the CCI could keep dropping, and that'll still retain its bearish divergence activity. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.